everyone, welcome to Edupedia World. I'm C. Radhika Singhal. Today we are going to start a new topic, financial services. Financial services are the services provided by the financial institutions in a financial system. Let's talk about one component one by one. By financial system, so in an economy there are two types of sectors. One are the seekers of the funds and the other who has funds. So the one sector which has deficit of fund and the other sector has some surplus fund. The surplus fund sector want to invest that amount into some other sector so that they can earn out of their surplus money. And the seekers of the fund are looking for such funds so that they can use those funds. So seekers of the funds are generally the firms and the governments, and the households are the suppliers of the funds. Now, how this fund should flow from supplier of the fund to the seeker of the fund. So, in a financial system, to provide these services, that is the management of the cash from supplier to the seeker, there are certain financial service institutions which help in cash management. So you can say that this financial system acts as an intermediary to facilitate the flow of funds from the supplier to the seeker. So the supplier of the funds, households do. They give their funds. Their funds is what? Their own savings to the firms and government. For flowing of their funds or giving their funds, they get the income and the financial claims in returns. So financial service institutions helps for the flow of funds from the area of surplus to the area of deficit. So you understand that financial services are those services which are given by financial institutions. And what are these financial institutions? These financial institutions are the organizations which help or deal in the management of finance. You can say money, right? So if I talk about management of money, so it involves all those activities which involve from transformation of the saving to the investment, right? For the transformation of these savings into investment, what is the role of financial service institution? What they are doing? They facilitate the transaction, that is the exchange of money from the household sector to the corporation. This savings get converted into their investment. So they help in the mobilization of the savings. And apart from that, they are also responsible that the fund get invested into the appropriate area where the customer is actually looking for to invest that amount. So wherever the household is seeking to invest their amount, basis their risk capacity, basis the amount of surplus fund, basis the nature of the sector, these financial service institution helps to mobilize those funds. So if we talk about the functions of financial services, they help in facilitating of the transaction, mobilizing savings, allocating capital funds, monitoring managers so that the funds could be allocated and will be spent as envisaged, and in transforming the risk by reducing, or you can say by enable the transfer of funds from those who can bear that risk. So for providing all these financial services should be as per the requirement of the customer, because the one who is having the fund, they'll invest. All of them have their own requirements. All of them have their own risk. And likewise, the seekers of the fund also look or seeking the funds basis their own terms and conditions. So you can say that these financial services are quite customer specific. It is subject to the variability of the performance and their quality of services. So you can say it is a very people-based service. You cannot hold those funds. These funds should be circulated. So you cannot store the financial, or you can say can store the funds. And apart from that, they are dependent on the market dynamics, because to a great extent all the economy is being affected because of the standard of living of economy. So the flow of funds got affected because of these changes. So the institutions who are providing such services, while evolving the new services, they actually also visualize or predict that what actually the market wants and how reactive are they in fulfilling the needs of their customers. So they have to maintain a balance between the market return and their customer wants. So these financial institutions provide various types of financial services. So when we talk about financial services cover a wide range of activities. Earlier, the financial services have a limited scope. So if we divide these financial services, you could say that there are traditional activities which were followed earlier. Traditional activities are further classified into fund-based activities and non-fund-based activities. So as the name suggests, fund-based means like underwriting or investment in shares, equipment leasing, hire purchase. All these services were provided by financial service institutions earlier. And certain non-fund based activities also. They are also called as fee-based activities. In this, they used to manage that fund. So, financial institutions also help the corporations in managing the capital issue, because mere provision of services or funds is not a solution for the corporations. They also need specialized services to manage those funds. So loan syndication, factoring, all these are the fee-based activities which the financial institutions provide to the corporations. There are the activities also which can be classified under modern activities because the scope has been expanded. These financial institutions has extended their non-fund based activities and they are grouped under modern activities. So by modern activities, the additional services that these financial institutions render are like they play a role of debenture holder trustee. They also help the corporation for planning in mergers and acquisitions. Apart from that, whatever foreign exchange risk is there, these financial institutions help the corporations to maintain, or you can say to hedge that risk. So they also do the undertaking, or you can say provide risk management services. So the scope of financial institutions has widened a lot and it plays a crucial role in the development of an economy. One of the major services that financial institutions providing is the merchant bank services. So by merchant banking services, it means that all the services which are related to selling, buying, or you can say subscribing of securities. Securities could be anything like shares, debentures, preference shares, anything. So whatever services which are related to the management from the issue to the post issue, or you can say their operational compliance, any other services, all these services are provided by the merchant banking. So you can say that merchant banker is a person who is engaged in the business of issue management. And apart from that, the merchant banker also assists the corporations in providing services relating to amalgamation and takeovers, for portfolio management, in project counseling. So there's a wide scope of services that a merchant banker offers. Considering the way the Indian economy is growing, the role of merchant banking services in India is indispensable. For a company, public issue is very crucial. So the success of public issue of a capital for a corporate affects the image of that corporation. So corporation took these merchant bank services. Generally, there is not a single merchant banker who provide all these services. So there is one lead merchant banker who assists the corporation in issue management. The one who is leading such services is called as lead merchant banker. A lead merchant banker has duties, I think, which can be bifurcated as from pre-issue to post-issue, and also regarding compliance and operational regulations. So if we talk regarding the services which a lead merchant banker has to offer, a lead merchant banker regarding pre-issue. So a lead merchant banker assists in doing the due diligence, in submission of the documents, in getting the underwriting done, then making the offer document public, and also works as an authorized collection agent. These are the pre-issue services that a lead merchant banker provide. So these are the major services. There are many other services which merchant banker provides. If we talk regarding post-issue, so as a post-issue, the merchant banker is responsible for the redressal of investor grievances. It is also responsible to coordinate with the intermediaries. And if there is any post-issue advertisement, the lead merchant banker takes that responsibility. Now, the issue management capital, it can be raised through various types of instruments by corporates, for which it also has to confirm regarding SEBI stipulations. So a lead merchant banker also has an obligation to comply with other requirements, like if there is any restriction or reservation that how much shares can be issued, when the next issue can be done, what should be the capital structure of the company, what should be the period of allotment, all these compliance, a lead merchant has an obligation to look over that. And also, the lead merchant banker is responsible to get the draft or final offer document. Any post-issue obligations, the lead merchant is responsible to supervise and perform the same. Apart from the issue management, merchant banker also assists in project finance services. Project finance means they assist in getting loan syndication. What happens? That whenever a project is there that requires a good amount, a good quantum of funds, a single financial institution cannot lend the corporation against it. So there are multiple corporations, institutions which group together and lend that amount to the company. So creating this consortium financing is called as loan syndication. So if so many institutions has to come together, there are a series of steps, or you can say that the company has to follow. Because first they have to create that what project they are dealing in. Then they have to prepare that loan application. That loan application is to be submitted to the financial institution. Then that financial institution will study whether that project is actually viable or not. So when it is proved that the project is viable and is quite feasible for the corporation, they submit that loan application to the sanctioning authority. When the sanctioning authority approves that loan is disbursed. So from preparation of that project report till the disbursement, there are various types of activities that has to be performed. A merchant banker takes all these responsibilities from project financing to the disbursement of loan. So now what do you understand by that what exactly merchant banker do? They do not act like a bank, neither they work like a development bank. What they do, that whosoever is there for procurement of finance, they help or assist those persons or work as an advisor, counsel them to get that finance. So they work as an intermediary to provide that financial service from a seeker of the fund to the provider of the fund. That's all for today. Tomorrow we are going to continue this chapter. If you have any questions, just leave your comment. Thank you and keep smiling.